Monday, June 2nd. I am on early on YouTube Live. Just so everybody knows, I do record YouTube Live early in the morning, usually around 8:30. It's about 8:20. I did some scans. We got a big show for you today. Start out with a little life advice for you, a little story. I did put out a newsletter this weekend about 5 lessons that I learned over the first 5 months that will help me in the next 7 months try and beat the S&P. Stanley Druckenmiller, 30 years. What did he learn? We'll go over that. The numbers look really good for June, but we're in a China war again. So we're going to look at that. The Catalyst Watch, we got a Circle IPO, which for those of you that don't know is a stable coin. Huge business. Jamie Dimon is screaming about the bond market, and we will go over a leveraged ETF that you could play that somebody, I forget which newsletter, is saying, hey, this is a good play on this bond market that Jamie Dimon is screaming is going to blow up. Some sectors are priced higher than others. What ETFs you want to invest in, blah, blah, blah. We'll look at individual stocks, including Cleveland Cliffs. We'll go Google, Meta, Tesla, TEM, Tempest, and huge winner. That if 2 months ago, if you put $10,000 into this one biotech stock, you'd have $3.1 million today. And it's not options. It's just a long buy. So we'll look at that, and we'll look at a little bit more a deep dive into NVIDIA as well. But I want to start out this Monday, not with stocks, but a little story. Okay, let me give you some career and life advice. I ordered shoes off of Running Warehouse. If you don't know, Running Warehouse is a phenomenal place to order shoes from. They were delivered last week by UPS. What happens with most deliveries at my house, and what happens in most deliveries, I think in every house, is that UPS will just leave it on the doormat in the front of the door. I'm okay with that. I live in a fairly safe neighborhood that hasn't had package thieves show up, but let's be honest, they're out there. The package thieves are out there. I saw the UPS driver placing my running shoes, and I knew exactly what they were, behind a planter in front of my house. And I was like, boy, that's interesting. And I just watched from the window, and I was sitting at my desk, and they didn't see me. And so he wound up going down my driveway and then coming back and placing it a different way. And I walked out. At that point, I walked out and I said, thank you so much. And he goes, yeah, I noticed that you could still see it. So I just wanted to make sure that you can never be too careful. That's life advice. Okay. He didn't have to do that. They didn't need, he could have done it. Go the extra mile in your work, in your life. I try this because a lot of people get annoyed when I talk about Seeking Alpha and TrendSpider on this podcast, and I do those quote unquote ads. Just realize and be compassionate. It may not be your first time listening to this podcast, but it may be someone else's first time listening. The goal of this podcast is to teach people, and it's not to sell those tools. I got several emails this weekend about, did you know about this feature? Did you know about that feature? Yes, I know about most features in these tools. I don't throw them up there because I don't use them regularly. The way I try and tell people how to use things, for years, I used free tools. Do not think that the tools are going to make you automatically a great investor or trader, okay? Free tools are just as good. And yes, I put some newsletters behind a paywall, but there is nothing that's going to do more for you than doing the research yourself and finding a strategy yourself. The reason I do these, promote these tools is not because, you must get them. It's because they have made me a better investor and a better trader. And I'm able to make a living using just those tools. If I didn't do this podcast, I would make a lot more money trading. The goal of this podcast is not to sell these things. The goal of this podcast is to teach as many people to find a strategy that can change their life. It's not about selling these tools. So the best thing that you can do is not buy the tools. It's to share the podcast with others. If you're learning something then share the podcast with others, because maybe, and I'm not going to be everybody's cup of tea, but at least open their eyes to a different way of doing things. And again, shout out to those people whose kindness isn't a strategy, but it's a way of life. That's the goal of this Monday. And that's the goal of every person in this audience. If you are a douche, if you are taking from others, do not take. The reason I started the paid newsletter wasn't because I wanted a paid newsletter. It was because my ass made a mistake, and I had so many people who were willing to pay me for the newsletter that I told them, I will give you a refund. They said, no, just continue doing the articles that we want you to do. And yes, that's what I've done. And so this weekend, I posted a paid newsletter, 5 key investing lessons from the first 5 months of 2025 to help me beat the S&P in the last 7 months. We just went through 5 months. Here's 5 things that I'm keeping an eye on. FYI. There are buys in there. There are tricks in there. There are things that I bring up on this podcast. I just summarized it into a very simple 5 key bullet points. That's it. So if you want to support the podcast, go and get the newsletter. The newsletter, it's right down here. It's the link down below you. It's linktr.ee/daily stock pick. It is right there. And you get one for free every day the market is open. So every day the market is open, I don't charge you. You get the notes for this podcast. It's literally a cheat code. So again, shout out to everybody whose kindness isn't a strategy, but a way of life. And that UPS driver, kudos. That extra effort that you put into your job is going to reward you in life. Karma comes around. So again, read the newsletter, do whatever you want, but let's go over some stuff. Okay, Stanley Druckenmiller. He's a far more successful trader and investor than I am. Here's what he ran Duquesne's, I don't even know, for average 30% annual returns with 0 down years. Okay, and here are what? 13 tips. Number 1, follow macro trends first. That's important. That's super important. Because macro trends, we want to know what June's going to give us. Okay? Some fodder for your favorite bear as we head into June. When the S&P gains more than 5% in May, like 2025, the next 12 months have never been lower and gain nearly an average of 20%. No month has better future performance after a 5% gain. No month. Okay? So the numbers are in your favor for a long-term investment. It's not a huge amount. You know, you've got 1, 2, 3, 4, 5, 6, 7 years. So it's not a huge amount. But the way you play the market is the macro, and you try and just say, okay, what's been working? What's been working? That's it. And the stock index futures right now, they're slipping. Why? Because we're looking at another Chinese trade war. This could provide an opportunity if you didn't get in the first time, because we all know the taco trade. Trump chickens out again. He already said this weekend, while he's going hard on Friday, this weekend, what did he say? I don't want t-shirts and socks made in the U.S. I want the big things. I don't want textiles. So he's changed his stance already. He changed his stance already. And what has it done to the markets? Well, in the markets, we're down 0.5%. 4-hour algorithm doesn't have you out. Maybe it gets you out. I don't think it gets you out. It probably won't get you out today without a crash. But we're trending down on the MACD. You want to be careful. Again, macro. We're close to those all-time highs. February was the all-time high. You know, in that newsletter on the weekend, I went through a monthly chart of QQQ. And I pointed out here, December's high, 539. January, 533. February, 540. That's an all-time high. Last week I went over. All-time highs are tough. You want to know why? Because when QQQ hits 541, it will be the first time in history anybody has ever paid $541 for a share of QQQ. Imagine a car or your favorite food item going to an all-time high, and then you having to make a decision. Is it worth me buying? That's the same with stocks. So March, you dipped down to 513, and everybody was scared. Nobody was buying in March. Everybody was scared because Trump was screaming about tariffs. Then you had Liberation Day on April 2nd, and that said, hold my beer. We can get much worse. 479 was the high. Again, these are the highs. And then in May, you're at 526. Right now on QQQ, you're at $516. If I told you it was going back to 540, you'd buy at 516. I don't know when it's going back to 540, but I guarantee you it will go back to 540. Don't know if it's next week. I don't know if it's 10 years from now. You could be going into the lost decade. I just don't know. But macro trends would tell you that we're still going higher. So it's just a way of looking at the market, and you can call me a perma bull. I am a bull. But the way I use this 4-hour algorithm, the way I use these charts is to tell me when I should take risk and when I can expect a reward. Right now, in the 4-hour algorithm, you got a gap down here on the Qs between 489 and 500. I would be using that 500 as a stop loss if I was trading. But I'm not looking to get in. I've got enough money in that I feel comfortable right now. But as I start to see us add, maybe I will. Today, probably doing nothing. But the Catalyst Watch, this sets up the week. So this is an email that comes out from Seeking Alpha every weekend on Friday. Okay, and you can watch it. Livewire has a higher level of implied volatility. Go and take a look at it. The big one this week, in my mind, it's not earnings, even though we'll get to those earnings because there are some good earnings this week, but it's this IPO Circle. Okay, expected to price its IPO and begin trading in the week ahead. Circle is looking to raise $624 million at a valuation of $6 billion. ARK and BlackRock are expected to be early investors. The quiet period expires on Aspen and Chimp, blah, blah, blah. But Circle is the big one, and I think it's Tuesday. Keep an eye on that one. Circle is what's called a stable coin. Okay, I think they own USD, I think, which is the biggest stablecoin. I am not an expert. Full disclosure, I am not a crypto expert. But what I know about stablecoins is they track the US dollar. And this one is the largest. And if they have $6 billion, okay, imagine the interest payment on $6 billion. That's what you're investing in with Circle, is that they can grow this USD and make more money off of interest. So it's a fairly safe bet in my mind. Again, until the U.S. government does a crypto coin, which we have a president who has a meme coin. Don't think it's out of the realm of possibility. But I like that one because it's going to provide some volatility. Now, Tuesday, you've got some earnings. You got Zscaler hosting an event. Wednesday, you've got additional earnings. You got Kraft Heinz and Ulta Beauty with a conference. Thursday, you got more earnings. You got Procter & Gamble and Levi's. And then you have Nintendo will release the Switch 2 in the U.S. Big. Lyft is holding its annual meeting with Engine Capital pushing for its own board nominees. So Lyft, you should see some volatility. Again, that email alone sets me up for the week, and I know exactly what to look at, and I make notes just based on reading it. It is a great article that comes out from Seeking Alpha. If you want that article, again, Seeking Alpha, I tell everybody to get the bundle. The bundle is premium, which you can read articles. There's no freaking annoying pop-ups. It is targeted towards you. You import your portfolio and you get an email every morning that has news on your portfolio. The premium, you get the quant, you get the AI analysis, you get everything. Okay, but the bundle comes along with Alpha Picks. Okay, Alpha Picks is a data-driven portfolio. We're going to get a new one today at noon. And look at the performance, 162% versus 57% in the S&P. That is what you are paying for. Steve Kress just did a fantastic newsletter last week about how AlphaPix is outperforming on earnings and outperforming over the last 1 month. It was a tough 6 months for AlphaPix. They are still outperforming the S&P. So it's a long-term portfolio. Get the bundle. Okay, it saves you. If you don't want the bundle and you just want premium, okay, you can get that. It's on my link tree. You get $30 off and you get a 7-day trial. With the bundle, you save $159. It's a great, great tool. Now let's talk about the markets, because Jamie Dimon on Friday absolutely destroyed the market. Okay? He discusses the dangers from tectonic shifts in geopolitics and the global economy. He said the Fed is right to wait on cutting rates. So don't expect the June meeting to cut rates. You are going to see, he says, you're going to see a crack in the bond market. It is going to happen. He says, we will not panic, meaning JP Morgan, when the bond market breaks. We'll probably make a ton of money. He's going to be positioned for that. When the bond market breaks, expect stocks to crash. And I've said this before, and I've said this many times. Keep an eye on that 10-year. Right now it's at 4.45. If that gets closer to 5%, danger is in the air. Okay, if it's down at 3%, by the way, the market is already broken. So the bond market needs to be orderly for the stock market to actually work. And then he goes on this weekend, and he has clips of this have appeared. The entire interview is going to show on Fox today. But he says the bond market is going to have a tough time one day. Don't know when. You know, again, I don't know when QQQ is going to get to 540. I think 541. He doesn't know when the bond market's going to break, but he says it will. What the public has to understand is that something like $30 trillion of securities trades every day. These are investors around the world. Foreigners own $35 trillion of American securities. They have another $30 trillion private investment in the United States or something like that. He's warning that this trade war and this we hate America around the world is going to come back and bite us. And that's just it. So I think the bond market is going to take us into that one. Now, what can you do? Well, Beachman's Salty Trades, which is a newsletter on Substack, he outlines it for you. The trade alert was originally posted on chat timeline May 20th, 2025. U.S. bonds are under pressure as bond traders are sniffing out higher inflation in the face of growing U.S. fiscal deficits. And yes, even the current tax bill, it increases the debt. We think the U.S. Treasury cannot afford to allow bond auctions to fail. They need to sell these bonds because they need the revenue to run the government. Therefore, they will support bond prices on any major drop. So what's he buying? He's buying the 3 times leveraged U.S. Treasury 20-year, TMF. TMF. He's buying this one. Now, mind you, it's a decaying asset, okay? This is a decaying asset because it's a leveraged ETF. This is not something you want to buy and hold. Over the 2 years that I've back tested this, you can see it right there. 24.6 months, you are down 50% if you bought 2 years ago and held. That's the bad news. The good news is if you use the 4-hour algorithm, you're only down 10%. There are better places to invest. But if you want a strategy like that, find something technical. This is a great opportunity to buy technicals because your average win on this is 6%. 31 positions over 24 months. So it's not like you're trading all the time. If you can find one of these winners, it might turn out to be a big winner. And I also say, one of the things this weekend, triple leveraged ETFs are a great way in this market with the volatility. And this is just one of them. Okay? But beware. This is concerning. I would understand if tech were driving the overvaluation that could have been attributed to R&D and intangible investments, but other market segments are also historically overvalued. Consumer discretionary, current 28 times PE. That is heavily influenced by Tesla. Okay, that's 74% over its history. Information technology, it's 82%. There are a lot. Even energy is down below. Okay, healthcare down below. Financials down below. I think financials are the best opportunity in the market. Real estate, utilities. I like these sectors, but understand the S&P is currently very expensive. So in my mind, I'm sitting back. I'm not necessarily doing anything. I'm relaxing. Now, maybe ETFs are the way to go. And I've said this before. VOO right there is a great option. I would put Berkshire in here. I would also put QQQ. But this is great because these Vanguard ETFs, you can compare them to iShares, to State Street, to Charles Schwab. Okay, all of these are great ETFs to hold and buy and hold. And it might not be the time right now to buy and hold when we're a little bit stretched. But when we get to that point, like you felt in April, that is the time to start adding these to your portfolio. Just my thought. I buy and hold VOO. I buy and hold QQQ. I don't own any of these other ones, even VUG, which is growth. You can look at them. Let's just go and look at VUG. I mean, you can literally do all of your research here in Seeking Alpha. Let's look what it's holding. It holds Apple, Microsoft, Nvidia, Amazon. This is my portfolio. Broadcom, Alphabet, Tesla, Eli Lilly, Alphabet. It's got 169 holdings. 50% of that is in technology. Okay, if we chart this and we look at this against the S&P, this is VUG. It makes 112% over 5 years versus the S&P at 93. So I would say VUG is better than VOO. Again, do your research. Understand what you're holding. Maybe enterprise software stocks are the way to go. It's an AI market. I will tell you, it's an AI market. This goes over 3 enterprise software stocks. They asked Seeking Alpha analysts, which one's your 3 go-tos? Team, which is Atlassian, Twilio, and Zeta. Go and do the research. Twilio is one that I like. Twilio in the 52-week range, it's not its all-time high at 151. It's dipped down, but it's come back. It's a strong buy in the quant. I like this one. Go and do your research. Again, I like it. What does Wall Street think that it's worth? 9% above where it's trading today. If you want to know more about it, you analyze with AI. And you can I use Twilio in my old job at Earthlink for the IVR. We used it all the time. I loved the software. Now, has it been a great investment? It's been up and down. Twilio's stock momentum is exceptionally strong with a 1-year price performance of 100%, significantly outperforming the sector, which is down 3%. This indicates a strong investor confidence and bullish sentiment. Earnings revisions, highly favorable, with 24 analysts pushing their revenue earnings per share up compared to only 2 down. It underscores analyst optimism about Twilio's future. Again, you can read all about it, and this is how I use TrendSpider, Seeking Alpha. But you don't need it. Here's Twitter, which is free. Value Sense, 10 most undervalued stocks our model is screaming to buy. Qualcomm, Splunk, QSR, Toast, Okta, Affirm, KGC, NEM, SMCI, grab. NEM I just got out of. Why? This was a paid newsletter subscriber one that I had put in there. The reason was because I had bought AR46 and I said when it breaks through this one, the 200-day, that red line, this was a technical trade. Now, I will tell you, when I look at this, I don't necessarily want to buy it. The top here is 58. I want to buy when it's bullish, but I think at 58 it's going to top out again. And that's a weekly chart. I like this one, but I don't think the risk reward does it. There are so many other stocks in this market that I can make more money on. But gold is going up. Our deficit is going to push gold up. Now, here's stocks that are near their 52-week low. In this market, if you've got a stock that's near its 52-week low, maybe FedEx, FDX. Let's go look at FedEx. Is that one that you want to look at? Because it's been trending down here on the 4-hour algorithm. It has you out here. 4-hour algorithm makes, hold on one second. Penny! Okay, so the 4-hour algorithm makes you just about as much, it loses you as much as buy and hold. So it doesn't trade well in the 4-hour algorithm. But when you look at this, it's under its 200-day. Now, I hear a lot of people say nothing good happens under its 200-day. Well, maybe this is one. Because every time over the past 10 years, when it's gone under its 200-day on the weekly, you've seen a rebound over the 200-day. It's a good shipping company. Now, if you want to look at it in Seeking Alpha or whatever tool you look at, maybe Wall Street says that it's worth $276. They've chased it down as it's come down. And you can see the factor grades from the quant. Valuation, growth, profitability. Profitability is an A+. A+, 27% gross margin. And you can read all about why those metrics are there. The company shows strong profitability with cash flow from operations of $7.2 billion, which is 2,000% higher than the sector median. And it goes into detail. So again, you don't need paid tools to go and look at this. You can look at all this on FinViz. Are you buying any of these stocks? Because again, they're close to their 52-week lows. Are there opportunities? Sure. Peter Lynch is a legendary investor, okay? He looks for trailing PE under 25. You can put this screener into Seeking Alpha. Forward PE under 15. Debt to equity under 35. PEG ratio under 1.2. Earnings per share growth 15%. Market cap over $5 billion. Here are 5 stocks. Barrick Mining, Prudential, PUK, QFO, Technology, QFin, THG, the Hanover Insurance Group, JD.com. Go and do your research. Again, this is dividendology, and these all have great yields. And it's Peter Lynch screener. So there are opportunities. The biggest movers. I have a core portfolio. Okay? A core portfolio, which is in Savvy Trade. You can get to it from Linktree. It's down here. Okay? Savvy Trader, follow my trades. This is free. And the core portfolio includes 33 names right now because I took out United Healthcare again. 33 names that I believe that you can gain on. Now, Cleveland Cliffs is one that hasn't worked out. It's down 64%. It is a very small position. Do not think that this portfolio is managed. It is 100 shares of the company. When it gets put in the portfolio and when I take it out of the portfolio, I sell 100 shares. If a split happens, I sell whatever shares are over 100. So it's not a managed portfolio, but Cleveland Cliffs is by far the worst performer. But let's look at this against SPY. Since I opened up this account and started tracking this, the daily stock pick core portfolio is up 48% versus the S&P up 34%. And one of the big movers today, Cleveland Cliffs up 26%. It's in the core portfolio. It's up 27% right now. It is flying. The reason, and this is a duh moment. This is a duh. We all should have known this. Of course, Trump was going to protect the steel industry. Of course, he was going to threaten to put a huge tariff on steel, which Cleveland Cliffs does make here in the United States, is protected from the tariffs. They will have more orders rather than manufacturers ordering from foreign places. It's up 27%. That's it. So it should have been a dumb moment. And another dumb moment in my mind is Gap. GAP. We saw the earnings last week, okay? The earnings weren't bad. It was not great, but what took the stock down was guidance, and it was based on tariffs. What did Trump say just this weekend? I don't want to make t-shirts and socks in this country. I want the big stuff. So what's he going to let? He may not tariff Gap. And Gap may actually be good. The valuation on Gap may be good. You've got a gap, not, pardon the pun, but you've got a gap here between $23 and $27. You're trading at $22.35. It's a good company at a discount. Now, am I going into this one? Full disclosure, this is not my thing. I may buy into this one just on a technical standpoint, and when it fills that gap, I would sell. I am not a Gap shopper. I do Under Armour, I do Puma, and I do Adidas. Those are the three brands that I typically do, and Nike every now and then. But Nike's too expensive. The Gap, it's not that expensive. Honest to God, the PE is super cheap compared to its competitors. It's ranked number 2 out of 36 in apparel retail. What's number 1? A top 2025 stock that has been soaring. Year to date, Urban is up 27%. Urban Outfitters, it just went through a huge rise. Gap went through a big rise and it fell. I think this one poses an opportunity. Now, the 4-hour algorithm, it makes me 77%. If I bought and held over the last 2 years, I'm up 188%. Okay? I want to buy when the 4-hour algorithm tells me to buy. Is that going to be anytime soon? I can tell you, knowing what the entry is, no. So I may want to take the chance of this 200-day right at 22 providing support, which it has. It broke through down to, let's see, the low was 21.98. So it has at 22, and I want to see, maybe that's going to provide me some support. Maybe I get out, I buy at 22 and I sell at 24 when it passes the 50-day. Or maybe I wait until it gets to that $27, $28. But again, finding that strategy and having it, there's an opportunity. Now, I will tell you, I've been screaming that Google, I sold a bunch of Google. I'm not out of Google. I still am a big believer in Google. I hate selling it at 160 or 170. I think it's a $200 stock minimum. But they need to reframe search. And they're losing on search. And I think it's just a lack of focus. They're focused more on AI, and they're willing to give up search, but they're going to make AI search work. And I have Sundar Pichai. I like him. I like his answer here. He looks super uncomfortable. He should be uncomfortable, because I think they're going to make search more like a billboard. Hey, this answer brought to you by here, and here's a 30-second commercial. I think that's what AI is going to get to. But again, they can't do that, because then everybody's going to go over to Perplexity. Everybody's going to go over to OpenAI. I think they're doing things correctly. And I think Google can long-term make it work. It's the cheapest of the Mag 7. And I will continue to say this, the valuation, even though it's an F and it's 18 and stuff like it's because of the sector that it's in. But I think they have so many things going for them. Would I buy it here? Absolutely not. Am I holding here at 170? Yep. Between 150 and 190 is where you want to trade this one. It's been clear. It's been super clear. Now, this 200-day is going to be a resistance, and your RSI is a little bit high. So you want to find an opportunity. Well, maybe Meta's one, because Meta plans to fully automate making all of its ads using AI. That's going to be a huge incentive for any advertiser to come and do advertising on Meta. And when you look at just the slider, the 52-week high is 740. You're trading at 644. Excuse me. It is expensive. It is. You're going to pay for something that puts off this much cash. It's a strong buy from Wall Street. Wall Street thinks it's worth $711. That's 9% upside. If you didn't buy Meta when it dipped under $600, wait for it. As it gets closer to $600, you can buy it. If you just want to buy it long term, I think you'd be fine. Okay, we can take a look at it from a 4-hour algorithm standpoint. The 4-hour algorithm, it makes you 105%. Buying and holding makes you 154. If you had the 4-hour algorithm and it told you to get in here at 521, you'd be doing pretty well right now. You win 52% of the time. I loaded up at that 521. I loaded up under $600. I am perfectly happy with my position. Now, maybe Tesla is something that you want to do, because Elon announced this weekend, hey, I'm going to be sleeping on factory floors again. They're launching the Austin Robotaxi June 12th. And historically, this is the most bullish time for this stock. Okay? One of the things that TrendSpider gives you is seasonality. And we're going to go to the monthly. And we're going to go all the way back to 2010, 15 years. That is a phenomenal win rate. 79% of the time, the stock is positive. That's huge. Now, 79% of the time, it's positive with a mean change in the month of June of 10%. The only month that has a better mean change is November at 11%. So maybe Tesla is one that you want to run. Right now, the 4-hour algorithm makes you 75% versus buying and holding makes you 87%. This was phenomenally better until we had this run from 255 up to 345. Again, if you had the 4-hour algorithm, you would have bought here at 255 like I did. I'm very comfortable at 255. I am not comfortable at 350. In between 300 and 400, I think it's a danger zone. But the effort is sleeping on the factory floor again. That's bullish for the stock. Again, it doesn't trade on valuation. You can't view this one. Snowflake. Maybe you want, like we were talking, maybe you want Snowflake. Snowflake broke out to new 2025 highs, and now it's flagging above the gap. It gapped up. I just talked about gap, wanting to fill that gap. Well, maybe Snowflake is going to come back and fill these gaps. And if it does, it's back inside my trading range, and I will buy it. The 4-hour algorithm, over 24 months, 26 positions, you make 43% versus buying and holding, you've only made 12%. So again, finding a strategy. It's very simple. Maybe you want to follow Nancy Pelosi because she bought TEM and she bought it around the price that it's trading. Here's the elevator pitch on TEM. You can go and read it. Maybe you just want to trade it around Pelosi. Well, you set up alerts for the Pelosi trade. The 4-hour algorithm has you out. The 4-hour algorithm is really good with this. It makes you 39% over 11 months because it's only been in stock for 11 months. With a volatility like this, you want protection. You want to make sure it doesn't make money. This isn't a stock that's making money right now. They're trading on future earnings. That's it. Now, if you want to know a really risky one, this one. RGC, shares of this random biotech company, are now up 20,000% in 2 months. Just to give you a for instance, if you put $10,000 2 months ago into this stock, you'd have $3.1 million. Let's go and look at it. Is it worth investing in? Let's go and see. It's not covered by the quant. So where would I go? I would immediately go to the financials and I would say, oh, okay, It's making $3.8 million. Maybe that's good, but we've got an $11 billion market cap. That's a lot. So let's go look at the valuation. Well, it's trading too high for me. Growth, they're not making any money, so they're not really growing. They're actually losing money on their working capital. Profitability, let's go and look. Return on common equity, minus 42%. Doesn't look good. Momentum, 3-month performance, you're down 10%. Or I'm sorry, the sector's down. This one is up thousands of percent. So momentum is fantastic. That would get an absolute A. Peers, there's some peers that you can look at. Would I go into this one? I wouldn't go into this one without some type of technical strategy in TrendSpider. An RGC, 4-hour algorithm, it makes you 630%. Okay, buying and holding makes you 3,161% over the last 31 months. 28 positions, so it's about once per month. And you can see 4-hour algorithm had you in here April 28th at $35. Where are you right now? Well, you're at 877. That's 2,551%. Huge. Would I buy it now? Hell no, I wouldn't buy it right now. But that's part of your plan. If you just bought it, you could have gotten into this one. Now, I'm not saying anybody knows about this stuff, but let's talk about real risk takers. Because for all you big risk takers, for the people that want to hit home runs, not singles, you're Aaron Judge. You want to hit the home runs. You don't want to hit a single. You don't want to run. You don't want to do work. Here's your YOLO of the day. Taking out credit card loans at 0% APR and putting it into Bitcoin. This guy puts it right there. He's doing the Michael Saylor strategy. He's told you he will buy $42 billion in Bitcoin over the next 3 years. I've told you I maxed out 18 total credit cards at 0% for $54,000 to buy Bitcoin and will hold it as long as he can. And he goes over his strategy and he goes over everything. He's made a ton of money at this. Doesn't mean you should do it. But again, he's got a strategy. He put it in play and he's making it work. That's what I'm talking about. I don't have the risk tolerance for this. No person in their right mind would have the risk tolerance for this. But there are crazy people like Michael Saylor and others who take the risk and actually enjoy the benefits. For the rest of us, we just oogle. Don't have FOMO. Make a plan and go out and get it. Now, one of my plans is AI. We are in an AI market. Okay? I like this ticker symbol U. It's this guy. He is fantastic. He used to do ARC analysis. Now he's gotten into specific stock analysis. And this is a 14-minute video just on NVIDIA. He thinks it could become a $5 trillion market cap company in the next year. He does a great job. He goes over everything. This is your elevator pitch. Okay. Now, NVIDIA, I have said, I like it between 140 and 150. That's where I think that you start selling. And it was clear last week, 140 is the resistance level. It's trading at 134 right now. But they have, if you get this one under $130, if you didn't buy this at $100, don't think you're going to buy it at 140 and double your money. It's a $3 trillion market cap. It won't go to 6. I don't believe it will go to 5 like my ticker symbol U, but he does a great job of going over how it could. And that's what I like. And so am I selling this one selling out at 130? No, I trimmed at 140 because I knew I had a strategy. I had an alert. I said, when it hit 140, I'm going to trim. I trimmed it. I will buy more when the 4-hour algorithm tells me to get back in. It's got a 57% win rate on this over the last 24 months. Again, having a plan, having a strategy, having the tools available to you to get these things done. Now, we've got some earnings this week. Credo, which is the number one 2025 stock from Seeking Alpha, they are reporting after the bell today. You can go and research that one if you'd like. I'm not going to go and tell you about it. I've already told you about it. I own some at 70. I own some at 30. I own some at 40. I like the stock. I like it going into earnings at 40 more than I like it going into earnings at 60. Am I selling it? No. The reason is I do think that $70 is where it's going to trade at some point in time. I have a very small position in this. It's not very large. So I like the 4-hour algorithm in this. Am I getting out? I'll get out when it tells me to get out. I will start trimming. But I like this one. And then tomorrow after the close, you've got CrowdStrike, which is another one that I like, and I trimmed at $440. Where are you trading right now? $470. That 430 is going to provide support in my mind. I have used, like I said, right here. I bought it. I timed this one before the 4-hour algorithm told me to get in. I have a ton of this at around $300. I have a ton from before as well. I have a large position in CrowdStrike. The two that I have in cybersecurity are CrowdStrike and Palo Alto Networks. Do I like this one going into earnings? I'd like it more at $390 than I do at $470. It's expensive. I've got a plan around it. And then later this week, you've got one that I don't own that I sold at $170, which is Broadcom, which I love. I shouldn't have gotten out of this. I made a mistake. I wanted to lock in profits. I was at long-term capital gains, and I should have moved it over to my retirement account. I didn't. I made a mistake, and I've been waiting ever since to get back in. I didn't want to get back in April 23rd to a stock that I just sold out of for a small profit where I could have taken a big profit, but it was a tax situation because it was in my brokerage account, and I didn't want to sell it. I knew it was a $240 stock, but I didn't know when. Did I know it was going to be this quick? No. Do I have exposure to it? Absolutely, because I've got tons of ETFs with this one in it. So I'm fine. But I want to get back into this. And if for some reason this dips down back under its 200-day, I'm going to get back into it. But I'm being cautious. I'm being patient. Now, let's talk. Before this podcast live on YouTube, I did scans to find stocks that are bullish in the 4-hour algorithm for you. I will publish them in the newsletter. Costco at $1,038. Would I be buying here? Hell no, I wouldn't be buying here. Their earnings were fantastic. They are overtaking retail. Costco and Walmart are both stocks in the retail sector. I own Walmart outright. I don't own Costco. I sold Costco at $880. Was it a mistake? Probably. You win 50% of the time. Over 24 months, 21 positions in the 4-hour algorithm. It makes you 84%. I just didn't get back in. I should have. But am I buying up here? I don't think so. And the reason I don't think so is I'd rather buy Walmart, to be honest with you. Because this one, the valuation is just too high. 57 times forward earnings. I don't like it. Even with their growth, the PEG ratio, it's 6.32. But you can't argue with their profitability. It's fantastic. Their momentum has been unbelievable. So that's the first one. Second one is one that if I didn't have a large position, I would be buying. And that's Palo Alto Networks. 192 it got you in. That 188 is where I think you could buy and sell right there. Where'd that come from? That came from the 2024, the February highs in 2024. And we've been around that area. It is expensive. It's an expensive stock. This is the leader in cybersecurity. I own 2 stocks in cybersecurity. It's Palo Alto Networks and it's a CrowdStrike. That's it. This one I think is firing on all cylinders. CrowdStrike has done far, far better. But I own both. So then you've got Chevron, you got UTG, you got Dutch Brothers, you got Celsius, you got Dayforce, you got Oracle, you got Royal Caribbean. Oracle is one that I've wanted to get into since it was $90. It's at $165 right now. And Oracle and the 4-hour algorithm just got another bullish leg up. It got you in here at 132. It's telling you today we've got confirmation and we could be making the next move back up to all-time highs. So again, you just need to understand some of this stuff. I will publish all of the list of stocks that have an entry today in the 4-hour algorithm so that you can get them. And if you want the 4-hour algorithm, it is up here. The top link, TrendSpider. Okay? You've got the standard plan at $54 a month. If you can't make $54 a month, you're just not trading with a large enough position. And again, if you have $5,000 in your account, do not spend $54 a month on freaking TrendSpider. It is too expensive. Use a free trading tool. If you've got $5,000, do not spend money on Seeking Alpha. Go and use Finviz. I'm not trying to sell you this stuff. I'm simply showing you how I use these tools. And when you get sick of me promoting them, just remember, may not be your first time listening, but it's somebody else's first time. The podcast is growing. The best thing you can do is share this podcast if you get anything out of it. If you don't, quiet quit. Don't tell me that my voice, grates on you. Don't tell me the shit that I've made mistakes on, because the market humbles everybody. Nobody's perfect in this market. So if you have any questions, hit me up. Everything's on Linktree, even my email address right here. So if you have any questions, hit me up. I'll talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.